Amazon just released its Q2 T25 earnings. The stock took a hit and people are freaking out. But I'm buying. Let's walk through what actually happened, what Wall Street didn't love, and why I think this is a big opportunity for long-term investors. Here's what they reported. Revenue came in at $167.7 billion. That's a 13% increase year over year. Net income was $18.2 billion, or 1.68 cents per share, compared to $1.33 expected. Operating income hit $19.2 billion, up from $0.7 billion last year. North America sales reached $100 billion, up 11%. International sales rose 16%, and AWS, Amazon Web Services, jumped 17.5% to just under $31 billion. So yeah, those numbers were strong, but the stock still dropped. Why? Wall Street was laser focused on AWS. Sure, it grew 17.5%, but Microsoft Azure and Google Cloud grew 39% and 32% respectively. Even though AWS is still the biggest player, CEO Andy Jassy says the next closest is only 65% the size of AWS. Some investors saw the slower growth and decided to sell. Add in some noise about tariffs and you get a sell-off. But in my view, this is short-term drama. Here's why I'm buying the dip. Amazon is printing profits again. $18.2 billion in net income speaks for itself. They're cutting costs and running leaner than ever. AWS remains the backbone of the internet. Even if it's not growing like Microsoft's cloud, it's steady, profitable, and landed big new deals with Airbnb, PepsiCo, SAP, and Warner Bros. They're going all in on AI. Amazon's rolling out tools like Kiro, Strands, and Bedrock Agent Core. They're baking AI into everything: Alexa, logistics, cloud, even managing robot fleets with DeepFleet. E-commerce is still innovating. They're expanding same-day and next-day delivery to 4,000 more towns. Prime Day was their biggest ever. And yes, there's now a Nike storefront on Amazon. Amazon is now a full-blown ecosystem. Cloud, AI, e-commerce, ads, media, logistics, even satellite internet with Project Kuiper. This isn't a one-trick pony. It's a multi-engine platform firing on all cylinders. Of course, there are risks. AWS growth could continue to slow. Tariffs and global headwinds could weigh on margins. And competition is fierce across every segment. But Amazon's scale, innovation, and infrastructure are why I'm confident holding for the next 5 to 10 years. So while the market freaks out over one line item, I'm zooming out. Amazon's executing, doubling down on AI, and setting up for long-term dominance. I'm buying this dip, not for a quick gain, but because I believe in where it's headed. What about you? Are you buying Amazon or staying out? Let me know in the comments. If this was helpful, hit like, subscribe, and I'll see you in the next one.